It's more than just European investors coming back into the U.S. CRE market. It's domestic investors. Yeah. And the reasons are justified in the way that you zoom out and look at the employment market being well ahead of where we were pre-pandemic, post-pandemic, bottom, of course. Look at consumer strength and look at the household formation that is happening in the U.S., all of which are the underpinnings of demand for various types of commercial real estate, including office space. And the Fed shift toward the easing cycle, which is now here to stay, and inflation having been reined in, combined with this economic strength and the lack of overbuilding in most property types, except for office, we'll talk about that in a moment, is the reason the investors are back in the market. Okay. We're seeing it already.
So the economy, jobs, households, and rate cuts, of course, all exciting. But that hasn't necessarily answered one of the biggest questions I have for you, and that is about the money that was, a lot of money was raised when interest rates were zero. A lot of people having to think about refinancing over this year and the next couple of years as well. Is there a wall of money problem in real estate that needs refinancing?
There's no question that maturing loans are at a record level in 2024 and 2025. However, because of the pressure put on lenders by the Treasury and the Fed to work with borrowers, extend these loans, and avoid a mark-to-market fire sale.
Isn't that called extend, lend and pretend, or lend, extend and pretend?
The pretend part actually has been bailed out by good economic recovery in previous cycles. And so there's a prevention of a fire sale going on, except for older, obsolete office buildings in urban markets, where those assets are facing so much obsolescence, like retail did in the U.S. 15, 20 years ago.
I want to tackle that structural change that we've seen in the industry since COVID, this whole work from home notion. We asked every CEO whether it was really here to stay. We kept pressing them, and yes, that is the case. It's beneficial for workforces to be some sort of hybrid format. Now in 2024, we keep talking about more and more companies mandating work from the office. Even Amazon talking about it, and they benefit from people being at home collecting packages. Right. So is that changing this structural shift in the office market as we know it?
The damage to the office market has already been done because it's unlikely that the workforce will go back to a full-time, 5 days a week, fully conventional format. There will always be more of a hybrid environment than we had pre-pandemic. However, we've seen the worst of it. We're seeing more and more companies mandate return to office, much more so than we've seen since the bottom of the pandemic. But the obsolescence of office buildings was already a problem pre-pandemic. And the pandemic just accelerated kind of an evolution. And with retail, it was much easier to reimagine shopping centers that were old and obsolete to other uses. With old office buildings, it's much more expensive to reuse them and reformat them. Therefore, they're having a much harder time than retail did.